When you're new to investing or starting out or simply want to improve your financial knowledge, well, hopefully in the right place. Because the one thing we don't teach people is about personal finance, the world of investing. So hopefully you now take the right steps. My name is Dave and I work in financial services and I help people access their pensions, something that most people is competing their share. So what are the aims of my videos and financial blog? It's to improve people's financial knowledge and awareness so you can reach your goals just like me. I've applied these principles becoming a net millionaire at the age of 52. So this video is about my stock and shares ISA for September 2025. Now it's not to say boast or brag or look at me, but to give people hope. If I can invest on a regular basis, think long term, you can build a sizable portfolio. It's not a quick rich scheme, but you can build a portfolio up to 6 figures plus. So what are the aims of the portfolio? Well, we're looking at annual return of 10%. Dividends for this year shall we say £5,000 and a year-end value of £153,000. So how have we done in the month? Well, we started at 159,958. We finished at 167,144. So an increase in the month of £7,186. Year to date, we're up 24.81%, and a quick comparison, the FTSE is up 14.5%. We will have good months, bad months, good years, but just go to show what will happen. Now, look at the following graphic. We booked contribution in the month of £488. So year to date tax year, £3,635. We normally put in about £250 a month. And where is our portfolio invested? Well, at the moment, 59.15% in UK and Europe, 30.75% in the Americas, which is increasing, and 10% in Asia and emerging markets. In the month, we received some dividends. Quite a good month, £798. So where did we get them from? Well, Lloyds Banking Group gave us £252, reinvested in 305 new shares, got a yield around about 4 or 5%. NatWest gave us £119, 21 new shares, again a yield of around 4 or 5%. We got a dividend from Barclays, £50.61, again reinvested 12 new shares, yield 4%. And HSBC gives a quarter dividend, £41, 3 new shares. Okay. And finally, L&G got a yield around about 9%, one of the biggest payers in the FTSE 100, but it gave us £333, 139 new shares. So across our shares, we've got 10 shares, we've got a yield of 5.12%. We've got a year to date 4160. So we're £380 above our expectations, but it just goes to show we'll have good months and bad months. Look at the chart. So let's dive into where the holdings are in a portfolio. First of all, we'll do the shares and then we'll do the funds. Now, they're my own personal opinions. We own 10 shares, all in profit. I see no reason to sell any shares in the foreseeable future. They were done for a reason. Now, at the moment, we own just over £80,000, so 48% of our portfolio in shares, of which 42% of the FTSE 100 and 6% in the 250. Following graphic, shall we say, Lloyds Banking Group is our largest holding. 21,000 shares, £17,500, 10% of our portfolio, as we found in the month, a very nice yield. Who knows what will happen, shall we say, with interest rates and profit margins, or shall we say, the car scandal. But had a very good run banking stocks this year to date. We own Aviva, the insurance company, 1,970 shares, £13,500, 8%, but it will pay a very nice yield during the month of October. We own L&G, as we said before, a yield around about 9%, 5,601 shares, £13,500, 8% of our portfolio. We own NatWest, the banking group, 1,282 shares, nearly £7,000, 4%, and as we found out, a good dividend in the month. We own Barclays, 1,699 shares, £6,500, 4% of our portfolio, again, a nice dividend in the month. And then finally, shall we take the banking sector, HSBC, 558 shares, nearly £6,000, 3.5% of portfolio. And now the banking stocks, shall we say, had a very good run. Shall we say, HSBC is nearly doubled this year to date. Now, away from the banking stocks, we own AJ Bell, the platform provider. 991 shares, £5,500, 3% of our portfolio. What we see as a growth stock. Assets under management increased, customers increased, whether it's through personal investment or platform providers or financial advisors, but a very good stock, and it is growing. We own Phoenix Group, the pension provider, what we know about. Major player in the UK, shall we say, buyout business, very cash rich, nice yield around about 10%. We own 666 shares, £4,300, 2.5% volume, but it will pay a very nice dividend at the end of October. We own a retailer, we own Card Factory, 4,114 shares, £4,000, 2.5% volume, very cash rich, expand on the high street, trying to grow its online presence, but what we see as a growth company. One is successful on the high street, but is expected to, so we say, recent cost inflation, minimum wage increases. And then finally, we own Sainsbury's, the retailer, 923 shares, just over £3,000, nearly 2% of it. Everyone needs food, it's in a price war, has got a nice yield of about 7%, and it has been on the, shall we say, an upward trend recently. But it just goes to show, shall we say, we've got some big names. They've been there for many years, the idea we just switch off. And as we proved, during the month, we got some nice dividends reinvested, so that will grow our portfolio on the next payouts. Remember, they're all long-term holds. Now let's look, shall we say, at the funds we hold within the portfolio. Now, at the moment, we've got 52% of the portfolio, nearly £87,000. We have been trying to simplify, but we've got 9 funds, 5 in profit and 4 in a loss, but mainly against certain sectors. So what do we hold? Well, we hold a passive venture fund through our platform provider of nearly £27,000. 16% of our portfolio, but it just switch off, meets the market, and it's got very low fees. We own a Fidelity World Index fund, £23,500, 14% of our portfolio. It does pay a nice small yield, very low fees of 0.12%, and we have been topping up. We put £15 a month. Why? Because we were solely UK based, but it's done to simplify our accounts. We've got an LNG technology fund, just over £21,000, 30% of our portfolio. Owned, shall we say, about around 250 stocks, and it will pay a nice yield during the month of October. Now, some funds have struggled recently is a China fund, £3,100, 2% of our portfolio. Has had a great run lately, but a small loss. We own 2 emerging market funds, one of £1,000, one of £955, but makes the under 1% of it. Now we are going to, shall we say, move out their funds, but next few weeks hopefully back in profit. But we're doing it to simplify life. 1, the less funds, and 2, reduce our fees. And then we have a Russia fund. We put £500 in. It went to 600 plus. It struggled ever since. Now it has had a good run lately. It's now at £323. But thankfully it makes up 0.19% of our portfolio. But it just goes to show you're not going to get every investment right. But thankfully it has been improving in recent weeks. Who knows when it'll come back in profit. Now 2 funds we've done for a reason. We've ring-fenced some money for a particular purpose. We didn't want to exist into our existing funds. We own S&P 500 fund. We put 3,000 in. It's now worth 3,700. But it's good returns past few months, past few years. But it makes up 2% of our portfolio. And finally, an all-world index share fund through HSBC. We put 5,000 in. It's now worth 6,400. But 4% of our portfolio. But we've done it with actually our existing holdings. But just go to show you're not going to get every investment right. Now we will simplify our funds moving forwards. We're going to ditch the American market China funds, and we're going to put them in passive funds or investment funds. But it just goes to show, if you think long term, invest on a regular basis, when it's tax wrapper, all your dividends are going to be tax free, all your growth is tax free, but you can achieve, shall we say, a survival if you take action plan. Remember, if you like the videos, smash the like button, subscribe to the channel, look at the blog, and we'll see you again in the next video.